Swing Trading Mastery, the Professional Trader's Complete Guide. Introduction. The financial markets represent one of the few arenas where individuals can achieve true financial independence through skill, discipline, and strategic execution. Among the various approaches to market participation, swing trading stands apart as the optimal balance between the intense demands of day trading and the passive nature of long-term investing. This book, Swing Trading Mastery, The Professional Trader's Complete Guide, is designed to transform your understanding of market behavior and provide you with a comprehensive, professional-grade methodology for consistent profitability. Why swing trading? Swing trading occupies the sweet spot in trading methodologies. Unlike day trading, which requires constant screen time and split-second decision-making, or position trading, which demands months of patience, swing trading allows you to capture meaningful market moves without the stress of intraday fluctuations. Operate with flexibility, making it suitable for those with full-time careers. Leverage both technical and fundamental factors to identify high-probability setups. Manage risk effectively through calculated position sizing and stop-loss strategies. This approach is particularly well-suited for traders who seek to generate consistent returns while maintaining a balanced lifestyle. Whether you are transitioning from day trading, looking to supplement your investment portfolio, or starting fresh in the world of trading, this book will serve as your definitive guide. What this book offers. This is not a collection of vague theories or untested strategies. Instead, it is a meticulously structured manual built on the following pillars. 1. Market structure mastery. Understand how institutional and retail traders drive price action and learn to identify the phases of accumulation, markup, distribution, and decline. 2. Professional-grade technical analysis. Move beyond basic candlestick patterns and indicators to master price action, volume analysis, and multi-time frame confirmation. 3. Institutional order flow concepts. Learn how to spot where smart money is positioning itself and how to align your trades with their movements. 4. Complete trading systems. Step-by-step methodologies for trend trading, reversals, and breakouts, including exact entry, exit, and risk management rules. 5. Advanced risk management. Protect your capital with layered risk protocols, including position sizing, stop-loss strategies, and correlation analysis. 6. Trader psychology and performance tracking. Develop the mental discipline required for long-term success and learn how to measure and refine your performance. Who should read this book? This book is designed for aspiring traders who want to avoid common pitfalls and build a strong foundation from the start. Experienced traders seeking to refine their strategies with institutional-grade techniques. Investors looking to incorporate tactical swing trading into their portfolio management. Finance professionals who want to deepen their technical analysis and execution skills. How to use this book. To maximize your learning. 1. Read sequentially. The book is structured to build knowledge progressively, from foundational concepts to advanced strategies. 2. Apply the concepts in real time. Use a demo account to practice the techniques before risking capital. 3. Maintain a trading journal. Document your trades, thought process, and outcomes to accelerate your growth. 4. Revisit chapters. As you gain experience, return to advanced sections to reinforce and deepen your understanding. A final word. Swing trading is both an art and a science. Success requires more than just knowledge. It demands discipline, patience, and continuous self-improvement. This book will provide you with the tools, but your commitment to applying them will determine your results. The markets are waiting. Let's begin your journey to mastery. Chapter 1. The Fundamentals of Market Structure. Every aspiring swing trader must first understand the underlying architecture of financial markets. Markets move through an endless cycle of accumulation, markup, distribution, and decline. These phases are created by the constant battle between institutional traders and retail participants. The professional swing trader learns to identify which phase the market is currently in and positions accordingly. The accumulation phase occurs when smart money begins building positions after a decline. This phase is characterized by sideways price action on decreasing volume. The markup phase follows, where institutions begin pushing prices higher as retail traders start noticing the move. Distribution manifests when professionals begin unloading positions to late-coming retail traders, often creating volatile, choppy price action. The decline phase completes the cycle as weak hands panic out of positions. Chapter 2. Advanced Price Action Analysis. True mastery of price action requires understanding both candlestick patterns and the market context in which they appear. The pin bar reversal pattern, for instance, shows its highest probability when appearing at major support in an uptrend after a pullback. The pattern consists of a long wick with a small real body, showing rejection of lower prices. However, traders must confirm with volume analysis. The pattern should form on above-average volume for maximum validity. Inside bars represent consolidation and often precede explosive moves. These two candle patterns show complete containment of the second candle within the first's range. The breakout direction from an inside bar setup typically continues the prevailing trend when occurring after a pullback, but may signal reversal when appearing at significant support or resistance levels. Chapter 3. Institutional Order Flow Concepts. Professional traders analyze order flow to understand where institutions are positioning themselves. Volume profile analysis reveals price levels where significant trading activity has occurred, indicating potential support or resistance zones. The point of control, representing the price level with the highest trading volume, often acts as a magnet for price returns. Time and sales data provides a real-time ledger of every transaction. Large block trades appearing at key levels often signal institutional activity. When these large orders consistently appear on the bid side during pullbacks in an uptrend, it suggests strong institutional accumulation. Conversely, large offers hitting the market at resistance levels may indicate distribution. Chapter 4. The Complete Trend Trading System. The professional trend-following methodology begins with identifying the primary trend direction using weekly charts. Traders should only consider long positions when price trades above the 40-week moving average and the slope is upward. For short positions, the opposite conditions apply. Once the primary trend is established, daily charts provide the intermediate trend context. Entries occur when the intermediate trend aligns with the primary trend and price pulls back to identified support levels. The 20-day exponential moving average often provides dynamic support in healthy uptrends. Traders wait for confirmation candles showing rejection of the support level, ideally accompanied by increasing volume. Position size is determined by the distance to the stop-loss level, always risking no more than 1% of total capital per trade. Chapter 5. Advanced Risk Management Protocols. Professional traders employ multi-layered risk management systems. The first layer is the initial stop-loss, placed beyond recent swing lows in uptrends or swing highs in downtrends. The second layer involves reducing position size when volatility increases, as measured by the average true range indicator. The third layer consists of daily loss limits, typically no more than 3% of total capital. Correlation analysis forms another critical component. Traders must understand how their various positions interact. Holding multiple positions in highly correlated assets effectively increases risk exposure. Advanced traders use covariance matrices to calculate portfolio beta and adjust position sizes accordingly to maintain consistent risk exposure across all holdings. Chapter 6. Trading Psychology and Performance Metrics. The psychological aspect of trading separates consistently profitable traders from the rest. Professionals develop strict pre-trade routines, including checklist completion and mental preparation. They maintain detailed trading journals recording not just trade details, but also emotional states and external influences. This data allows for continuous improvement through pattern recognition. Performance metrics extend beyond simple win rates. Professionals track profit factor, gross profits divided by gross losses, average win to average loss ratio, and maximum consecutive losses. They analyze trades based on setup type to determine which strategies work best in various market conditions. This data-driven approach allows for continuous system refinement and adaptation to changing market environments. Conclusion. Swing trading represents one of the most effective approaches to navigating financial markets, offering the perfect balance between active trading and long-term investing. Throughout this book, we have explored the foundational principles, advanced technical strategies, and professional risk management techniques that separate successful traders from the rest. The journey to becoming a proficient swing trader begins with understanding market structure, recognizing how institutional and retail participants influence price movements across different phases. From there, we delved into the intricacies of price action, volume analysis, and multi-time frame confirmation, equipping you with the tools to identify high-probability setups. We examined complete trading systems, including trend-following methodologies, reversal strategies, and breakout techniques, each backed by precise rules for entry, exit, and risk management. The importance of position sizing, stop-loss placement, and correlation analysis cannot be overstated, as these elements form the backbone of capital preservation and long-term profitability. Yet, technical skill alone is not enough. The psychological discipline required to execute trades consistently, manage emotions, and adhere to a well-defined plan is what ultimately determines success. By maintaining a trading journal, tracking performance metrics, and continuously refining your approach, you cultivate the mindset of a professional trader. As you move forward, remember that mastery is not achieved overnight. The markets will test your patience, adaptability, and resilience. However, with the frameworks provided in this book, you are now equipped to navigate these challenges with confidence. The principles and strategies outlined here are timeless, applicable across stocks, Forex, and cryptocurrencies, regardless of market conditions. Your task is to apply them diligently, learn from each trade, and remain committed to the process. The path to trading success is now before you. Trade wisely, stay disciplined, and let the markets reward your perseverance.